Thanks, Dawn. Well, India's economy rebounding strongly from the pandemic-induced contraction. The government says today GDP is actually 1.3% above pre-pandemic, but it's not clear skies ahead as Asia's third largest economy foresees growth slowing. Well, the government is penciling a slower growth next year in the range of 8 and 8.5%. GDP for the current year ending March is projected to grow 9.2%. That reverses the previous year's decline of 7.3% when the country endured the pandemic and lockdowns. Rebecca Bundan joins us now. Rebecca, let's start with the government's comments about the current fiscal year. What's worth highlighting?
Yes, it all sounds very encouraging with that figure of 9.2% growth in the current financial year, which runs from April until the end of March. And it sounds good, 9.2%. That's a headline figure. But what we have to remember is the fact that India did have that very strong slowdown in the previous year when it was really hit very hard by the pandemic and those very tight lockdown restrictions that India introduced, having one of the world's strictest lockdowns in 2020. And that really hit the economy very hard. So this is actually a figure that comes off that low base of the previous year. And that's actually why we're seeing such a robust figure. But also at the same time, the government has highlighted the fact that the economy is now returning to pre-pandemic levels in terms of growth. So that is very encouraging. Economists also point out, however, the fact that India does need to be seeing very, very strong levels of growth to be able to create enough jobs for its young population. Unemployment has risen during the pandemic. People need to be lifted out of poverty. Inequality has also increased, and also that the recovery is actually very uneven across different sectors. For example, tourism, retail, consumer-driven sectors, a lot of them are still struggling. So that's another issue. And this economic survey comes ahead of the union budget, the annual budget, which will be presented by Nirmala Sitharaman, India's finance minister, on Tuesday. And that's going to be very closely watched to see how the government handles its situation and boosts the economy.
Well, Rebecca, the government is also projecting slower GDP growth forecast for the next financial year at 8 to 8.5%. That would still make it the fastest among major economies. What are some of the factors for this, and also what could derail growth?
Yes, that's still, again, quite a high figure. And the factors that are actually supporting those kind of projected growth levels are sectors including the agriculture industry. That's actually performed very well throughout the pandemic. Also, the fact that we are seeing an improvement in the economy and economic activity in terms of things having opened up compared to previously. There's been a lot of adjustment to the pandemic. There's an expected increase in industrial output, exports. Those are all factors that are likely to support this growth. But there are also massive risks on the horizon. And also the reason for that slowdown as well compared to the previous year in terms of growth is, of course, because of the COVID situation, Omicron now having slightly derailed the economic recovery that India was seeing, with slightly less strict restrictions coming in, but still having had an effect on economic activity, business activity. But there are all these factors on the horizon that could pose a huge risk, because this projection doesn't actually take into account the possibility. It's based on the assumption that there won't be another massive wave of infections that actually results in another very, very strict lockdown. That would completely derail that kind of recovery, that kind of growth that the government is forecasting. There are also huge inflationary pressures that India is struggling with at the moment, particularly if energy prices, oil prices continue to rise. That's going to be very, very difficult for businesses, for households to actually handle, and that could hamper the recovery as well. And we also have to remember the fact that there's going to be a withdrawal of a lot of the monetary support from central banks globally as well, and we'll have to see what kind of effect that has too.
Well, thanks for that, Rebecca Bundan in Mumbai.